Welcome to the deep dive. Today we're taking a closer look at Link Bilgisayar Sistemleri A. They're a significant Turkish software company, been around since 1984, based in Istanbul.
That's right. Historically known for ERP, but the real story now, based on what we're seeing, is their shift. They're pushing hard into AI, cloud solutions, and e-transformation.
Exactly. And that's our mission today, to really dig into their 9-month 2025 financial report. We want to help you, the individual investor, understand what's going on inside this, well, high-growth, R&D-focused company.
Are they building something sustainable? That's the key question.
Hey, if this kind of detailed breakdown helps you navigate these complex reports, please do take a second to like this deep dive, subscribe for more, and maybe share it.
Yeah, that really helps us out. Okay, so Link's core business. They build integrated software, think ERP, HR management, and those crucial e-transformation tools like eFatura.
Right.
But strategically, they seem really zeroed in on like three main things now. AI-assisted ERP, cloud tech, and also the USL ERP, green ERP, basically platforms for ESG scoring.
And they reach the market through a pretty wide network, right? Over 100 solution partners.
That's how they scale their reach.
Now, all this focus needs people. And we saw a noticeable jump in their headcount. They went from, 52 employees end of 2024?
Yeah.
Up to 69 by Q3 2025?
Yeah.
That's quite an increase.
It is. Shows investment.
And something for maybe ESG-conscious investors to note. Executive pay for the 9 months was about 7.8 million Turkish lira. But the board, currently 6 members, doesn't list any women members.
Good point to be aware of. But, the clearest signal of their future plans is the R&D spend. They've launched significant new projects out of Gazi Technopark.
This isn't just tinkering, is it?
No. This looks like serious investment in future market share. Take their smart energy management system, AEYS, that has an 18.5 million TL budget.
Wow.
And a blockchain-based accounting system project, 18.7 million TL budget. They're funding next-gen products like Link Cloud ERP and Link Smart HR.
Okay, big plans. Big spending. But does it show up in the results?
Oh.
Let's get into the Q3 2025 numbers, and this is really important context for everyone listening.
Absolutely critical.
All these figures are inflation-adjusted using TMS 29 accounting. So we're comparing apples to apples here, looking at real growth.
Couldn't stress that enough. And the headline, scale. Just look at Hasılat revenue. It absolutely skyrocketed 1.161 billion Turkish lira for the first 9 months of 2025.
Compared to what last year?
Just 124.1 million TL for the same period in 2024. It's just explosive growth.
Incredible. And is that translating to profit? How's the operational efficiency?
It is. FAVK, that's their EBITDA, jumped massively. We're talking 277.4 million TL, up from only 26.3 million TL.
Okay.
And the bottom line, net period income, also huge growth. It hit 150.1 million TL. Last year, it was barely positive, like 0.76 million TL.
So the operational leverage is definitely kicking in. What about the balance sheet? Does it look healthy?
It does, yeah. These seem quite liquid. The current ratio went up from 2.15 to 2.76, and maybe more importantly, the quick ratio, which strips out inventory, improved from 1.97 to 2.72. Very solid.
Any concerns on debt?
Well, net debt did tick up a bit from 155.7 million to 204.4 million TL. But crucially, the net debt to total capital ratio is still pretty low, around 13%, so manageable.
And for me, one of the strongest signs is the cash flow. What happened there?
Big turnaround. Last year, 9M 2024, operating cash flow was negative, minus 63.2 million TL.
Right, burning cash.
Exactly. But for the first 9 months of 2025, it swung positive to 37.9 million TL. That confirms the sales growth isn't just on paper, it's turning into actual cash.
Okay, that's a very strong sign.
Definitely. Now, before we wrap up, a couple of things from the footnotes investors really need to see.
Go ahead.
First, there's a significant related party liability. About 160.5 million TL owed short-term to Mia Technology A. They're an affiliated company.
Okay, so something to keep an eye on how that gets managed.
Precisely. Second, they're boosting their equity. It's already up to nearly 1.4 billion TL, but they've applied to the SPK, the Capital Markets Board, for a capital increase of over 870 million TL.
Raising more money.
Not exactly. They plan to do it using internal reserves and retained earnings only. No external dilution. It's basically a signal of confidence, capitalizing retained profits to support future investment.
Right, strengthening the balance sheet from within.
Yeah.
So let's try to summarize this for you. Link Bilgisayar is showing, frankly, incredible inflation-adjusted growth.
Phenomenal numbers.
They've got strong liquidity, and they're very clearly aggressively investing in these future-focused technologies, AI, cloud, ESG. They're putting their money where your mouth is.
They really are, which leads us to perhaps the provocative thought to leave you with. They're making these huge multi-million TL bets on R&D, clearly aiming for dominance in specific Turkish tech areas. How quickly can they actually translate that domestic R&D success into a real, sustainable international presence, moving from being a strong local player to competing effectively on the global stage? That's going to be the ultimate test of this whole strategy, isn't it?